Hey, it's Ed here. Today we're taking a look at technical analysis for Bitcoin with Elliott Wave Theory. Couple of advertisements here at the start. I finally completed the Elliott Wave and RSI Advanced course, so if you want to master the RSI and want to learn how it can be utilized properly with Elliott Wave Theory, check out the course on Udemy. I've also founded Countertrend Capital with these guys over here, so if you are looking for signal service and more education, check us out here on countertrendcapital.com. And lastly, if you want to educate yourself and support me, you can take a look at Patreon, where you can find Elliott Wave Basics course, access to weekly live streams and extra content overall. Thank you for your support. Let's get into the charts next. So here we are on 4-hour time frame on Bitcoin, and today we're going to be focusing on more of this structure here, but of course we're going to be looking into the macro as well to see how these local structures affect the overall macro picture. Now that we have extended here on price back to this area of this previous consolidation, is very important for bulls to take control here. Again, we are still within the bearish resistance area, and bulls need to take us through this area and get a consolidation here before a continuation to the upside. Of course, there is a chance that we just do this and then we rocket through. But again, this is very key on the macro picture overall to take place and see how that is working. Now, Elliott Wave wise, we have two different ideas here, very locally, and macro picture wise, this is the bottom for bulls, where we had WXYXZ coming down here, and this 5-way structure here would be a start of something new, and that would be for the bulls. And for the bears, this would be a 5-way that's ending something here, which would be this count over here. Now, let's take a look at this local structure here and talk about more of the micro stuff here. So again, overall, since the lows of November 22nd, we had this potential 1, 2, 3, 4, 5 into the highs of around February 21st. Since then, again, we have this as a 3-way structure coming down like so, and the previous expectation was that we were looking for that wave B here. Overall, the expectation was that we were going to be having A, B, and C. That did not happen. We pivoted here in the middle. But yeah, the extension targets or the retracement targets here are still the same. So again, this current 1.618 is something that we can't go to unless this whole structure gets invalidated. So the idea here is that wave B has to pivot before 28.94K. So again, that is the retracement of wave A. For that to happen, we need to be looking into the smaller degrees inside of this potential B wave. So let's take a look at that. And within this, we would need to look at this bear count. Again, this bear count would be saying that we have a 1, 2, 1, 2, 3, 4, 5 into 3rd, 4th, and 5th. This would conclude an wave A here overall. Then we would have a 3-way structure here, wave A here, and then look for a this wave B, and this wave B would need to be in 3 waves. Now there is some issues here with this being a B wave and a split in 3 waves, because again, we do have these areas where we have extensions, and we have the highest RSI readings in the middle of this whole thing. So again, we do have already divergences, which generally means that this is not going to be a 3-way move, but instead it's a 5-way move where we do see these divergences forming. But for the sake of this scenario, we would have to stop the B wave before 28.1K. This is the exact same scenario as we have for the higher time frame here for this B, but again for this lower degree. 1.618 here for this lower degree is 28.1K, which is again the retracement of this wave A here. If the price goes beyond here, then this is no longer the case. And this scenario is not what we are actually having. But for the sake of the bear scenario here, we would be looking at this: A wave, B wave, and then C wave. At the moment, I don't really see much bearishness here yet. I just see this consolidation, of course. We have double bottoms here, which is again storing some liquidity for sure. And if we sweep these lows, swing failure pattern, we definitely can take one more high here and go up to these highs again. And again, if we stop and revert before 28.1K downwards, then we can still talk about this scenario. Now, if we are pivoting from current structures or current highs that we would be looking at some of these targets here. So again, the lower the B wave or C wave here goes, the better. Why? Because this C wave over here, which is the sub minuet or the purple count, would need a partner leg to the upside to create here. Again, B would end here, and the lower the B wave ends, the higher probability the C wave has to end before the 1.618 at the higher time frame. Again, a lot of different things needs to be happening in order this B wave to end before the 1.618. That's why we came from the higher time frame to look at the higher time frame invalidations and towards the lower degrees. And hopefully you can actually follow that, because this is very important. So first step, again, pivot before the 1.618 lower time frame, get enough lower of a retracement here so the wave C can stop before the 1.618 of that higher degree. Okay, and then we can be talking about the higher degree again, where this was the A wave, B wave, and then C wave. And again, generally the wave C would be expected to take out the lows unless it becomes a running flat, at which case again that is more rare, but we'll talk about that later on. Now the other scenario, instead of this being a wave B, this would be something else. We can be labeling this in 5 waves, where this would be a 1, 2, 3, 4, 5. Again, substructures don't really fit this well, but again, we do have these divergences here. Let's check out the 30 minutes. We do have divergences here, as mentioned before, and we do have divergences here already in place, and we have again divergences all the way. So again, those are all the things that we are looking for in any 5-way move. Divergences within third wave, divergences within fifth wave, and divergences between the third and fifth wave. So everything is very well placed here as well for a 5-way move. The wave 4 here is kind of deep, but again, compared to this wave 3 here, it's nothing really it's not really too large. If we are seeing the retracements here, we can see that we're right on the 32. Now, how does this fit into the higher time frame? That is the main question. Again, as mentioned before in the previous videos, the 38.2 in time, comparing this structure for the potential reversal, the 38.2 is something that we want to be having for the correction within time before a next structure is about to happen. That's why I was bearish previously as well. But again, time does not need to be happening. Time does not need to be filled. It's more of a guideline again. Generally, these are very good, and very often we see the 38.2 at least hit before we get a next move. But sometimes, like if this is happening and we go past the 1.618 that I just mentioned, this is the count that we would be following. And again, this is more bullish. At this point, this would be a wave 1 of something, this would be a wave 2 of something, and then we go up. There is a chance that this is another 1, 2, and this is the ultimate bullish scenario. A 1, 2, 1, 2. Of course, this could become a wave A, B, and then C, where this is a wave 1 of C, 2, and then 3, 4, 5. So let's take a look at that scenario, look at the extension targets. If this was a wave 1, 2, we'd be looking for targets anywhere from 1 to 1 to 1.618. That is the target box. And if this whole thing here is a wave 2 of that C, we'd be looking for around the golden pocket. If we are looking at the normal extensions, we would be looking at 2.618 for the third wave. Oh, sorry, the last fifth wave basically. And we can see that this structure already goes well past that. And again, this is the target that we have generally for all the 5-way moves that don't extend in third or fifth wave. And generally we do have an extension on third or fifth wave. So if we pivot here, this would be the normal looking 5-way structure. And we can see that we go well past the expected here. So there is already some clues that this could become a 1-2-1-2 scenario. Now, I still don't want to be overly bullish, because that is not the way to trade. But if this comes down towards the golden pocket in threes, we definitely have a great setup here. Great potential for higher higher prices in Bitcoin and all the altcoins, in crypto as well. So again, keep that in mind, as there is a massive opportunity here to come. Now, of course, if we don't go beyond the 1.6% here in price locally, but revert before that downwards, there's always this chance that this becomes wave A, B, and then C, A, B, C, and then that C wave getting that partner leg, and then we would be looking at the more bearish scenario all over again. So keep that in mind, because again, this would lead us to take out most likely these lows here, and only then we will see and decide how this whole thing is going to go. But I think that is enough of the macro talk and also the micro talk, because micro always leads to the macro. Hopefully you understood most of the advanced structures here. Again, a lot of different degrees here on the micro accounts that are leading up towards the higher time frames. But hopefully again you learned something and got some of the ideas here. Again, if you want to be learning more about Elliott Wave, check out Patreon, check out Discord, and of course the course on Udemy. If you want to be getting some kind of trade setups and more educational stuff as well, check out Counter Trend Capital as well. But I think that's going to do it for this video. Thanks for watching, and see you on the next one. Bye bye.